That's the whole thing about DCAing. Remember, guys, those of you guys who are seeing your portfolio dip, as long as you're not buying crazy, stupid shit, the cool thing is if you're DCAing, in other words, every time you get paid, you're taking a little bit of money and buying, you're buying on the way down. That's what's important. You're like, Stocky, my portfolio is red. I hate this investing thing. No, you're going to love this investing thing. People always DM me and say, Stocky, how do I build my portfolio in a way where I'm not over leveraged? I want to have that risk, but I don't want to be 50% Palantir, 50% Viacom, or 25% VU, but 25% Viacom, 25% Palantir, and 25% Fubo. Like, Stocky, that's where you learn from your mistakes. So, what you learn from this, regardless of if you sell for a loss, you bag hold or whatnot, is understand one word. You do not want to be over leveraged in any single position. The reason that I say this is everybody says, yeah, Stocky, but if I would have gone 100% in Soxal last year, I would have made 1,300%. That's true. And if I wouldn't have drank so much, smoked so much, and fucked so much, I would have kept my looks. We can't go back in time. Okay? We can only make changes now for moving forward. Okay? So, you could say if I have 100% of my portfolio in Soxal, I would have made 1,300%. But if you have 100% in Soxal now, you're probably negative, depending on when you bought. You can't live in the past. Never over leverage yourself. You want to have risky investments in your portfolio. That's the way to do it, right? The riskier, the more money is good when things are good. But it also hurts on the way down. And that's why I tell you guys, like me, I have positions. I have decent sized positions in some of these speculative shit that I've been buying on the way down because my idea is just like, remember with Gap, guys? Do you guys remember, does everybody here remember Gap? Okay. I told you guys when Gap dropped that I was buying GPS. I was bullish on GPS. It dropped. I bought. And it dropped some more. I bought some more. And why? I did this. I have a YouTube video about the sector rotation. Okay? So what I ended up telling you guys, the reason I was buying is because money was moving out of retail in Q4 of 2020. And I said, you know what? When the stimulus comes back around and the new administration comes, I expect that money to flow back in. Okay? And I bag held this shit for a while. Some of you guys bag held longer than me. I ended up selling for even though I said this is a Q1 play. Q1 is January through March. I sold this shit in January. It was a Q1 play that I sold in January. Does everybody remember what happened with Gap? After I sold, of course. That money came flowing back in and it went higher than the previous Gap on Gap. The idea of sector rotation is, like I said, you've got a different sector, whether it's retail, tech, bio, medical, spec, right? Just for example, right? People make profit here, then they sell their profit. Stock dips. Then they put their money here. Tech goes up, this goes down. Then they make their profit here, this goes down, this goes up. The idea is you're never going to time the bottom perfectly, but the idea is to grab a little bit of the bottom of each one of these because that money's going to flow back in and you want to be the son of a bitch who's sitting there on all those shares at a discount when that money flows back in, and then you're the motherfucker who sells to everybody else. That's the idea of grabbing it. Now, in this case, we're talking about speculative stocks that ran a ridiculous amount last year. So even if the money flows back in, it's probably not going to have the same run as it did last year. And that's something I want you guys to be aware of. If you jump into something and it doesn't play out for you, fuck it, it didn't work, we move on. It's like going on a date, right? You go on a date with somebody and it doesn't work out. What do? Maybe you go on a second date and it still doesn't work out. Do you say, well, I've already been on 2 dates. I'm going to have to stay with them now. We have to get married to them. I'm going to have to stay with them for 2 years. No. It's the same thing with this. Okay? That's not how it works. I've been flat for the last couple weeks, actually, because my boomer shit has been doing well, but my speculative shit has been dying. My options have been carrying, but I've been taking that money and dumping it into other stuff. That's the whole thing about DCAing. Remember, guys, those of you guys who are seeing your portfolio dip, as long as you're not buying crazy, stupid shit, the cool thing is if you're DCAing, in other words, every time you get paid, you're taking a little bit of money and buying, you're buying on the way down. That's what's important. You're like, Stocky, my portfolio is red. I hate this investing thing. No. You're going to love this investing thing. You're going to fucking love this. You are going to love this because here's the thing. And this is why I got to tell you guys this. This is why I got to tell you guys. I got to reiterate this a lot. Remember, stop thinking short term. What is the money you use for investing? Money you use for investing is money you're not going to use right now. It's money you don't need right now. You want it to go down right now. That sounds crazy, but listen to me. Listen to me. When you first start investing, you want the market to go down because you're young or younger now than you're going to be down the road. So you're DCAing. You're putting money in the market, and the market's doing this. You want it to do that because you're buying here. And then when the market rebounds or that sector rebounds and it's doing this, you'd much rather have all your money in here, okay, than in here because your return is going to be so much significant. Now, extend this down the road, 10, 20, 30, 40 years down the road, okay? If you're buying in the dips, I'll give you an example. Okay, 2008, 2015. Where would you have rather have bought your shares? Here or here? So the sons of bitches who bought here and were like, I fucking hate this investing thing. This fucking sucks. I hate this. Every time I buy, it goes down. Well, guess what? When they got to here, that's their gain. These guys were like, I fucking love this investing thing. This fucking rocks, man. Fuck, every time I buy, it goes up. Then they got shit on, and then when it got here, their return was that much. And yours was here. Now, not everything rebounds. But I'm talking about total, like a diversified portfolio. I'm not talking about the son of a bitch who went all in on, I don't know, some shit that went bankrupt, or Scorchy who went all in on LK Coffee, okay? So there's gonna be problems there. But when you diversify your portfolio, when you buy VU, this is why VU is my biggest holding. VU, and I have some QQQ, and, you know, I have all my divvies, okay? Yeah, they're going to go down. I'm going to buy into them. And then when they go back up, you know, Disney, Microsoft, you know, Walmart, Logitech, IBM, Qualcomm. I mean, I could go on and on and on and on and on. That's the whole point. That's the whole point. Now, for those of you guys who jump in on speculative shit and it wrecks you, you might have to wait a little bit longer. Or you have to wait forever. I don't know. That's why you got to diversify your portfolio. But it's cool. It's awesome when the market dips now because then you're going to make money down the road. Except Palantir is going to hurt you every single day. I think there's two things that a lot of people here are having problems with. Number one, they're understanding that investing is a long-term game. And number two, I think people are over-leveraging themselves into quick returns. And they're seeing super blood days.